morning, guys. Let's see Bank Nifty analysis of what happened yesterday. You can see market actually gapped down yesterday, forming a clear island type of pattern. This is a clear island type. So if the market the next day continues further selling, there is high chances that the market is bearish and it might continue further low. If you look at higher time frames, you can see clearly that this is an island top formation. So and the market gapped down. As long as this island top gets broken and form some kind of support and again it tries to break out, only then we can look for C side. But currently the market is totally bearish and you can trade towards the downside as long as the market doesn't cross this level. And if someone whom you might have seen the island top formation, this is a clear sign of bearishness, guys. You can see here also there is a gap and here also there is a gap, and this gap acts as a resistance for further price movement. Here you can see clear resistance over there. This gap acts as resistance or a window, and price may face rejection from here. And it's always to look for downside. And looking at daily analysis of Nifty, if you go to 1 minute time frame, and you can see yesterday's pivot range might have been between here. This might be yesterday's pivot range. As you can see, the market gapped up, went down, took support from this breaker block. This is the breaker block. As you can see clearly, it took support from here and tried to head higher. And on my analysis of what yesterday was that you can see after a lot of buying pressure over here, the market targeted all those buyers over here, and again the market rallied upwards. So what I was expecting is that the market would gap up, uh, and again further buying pressure might have happen. But what actually is the manipulation is that the market targeted even all these buyers and the market actually gapped down, guys, resulting in the clear sign of that the market is bearish. So even for tomorrow also we can't expect, as long as this common resistance has been not been taken out, we can look for bearishness only. And here you can see the first candle fib here. The first candle fib, if you try to mark it down, you can see the price facing multiple resistance, and looking at moving averages and trying to place anchor VWAP over here, you can see clearly that the market retraced to the fib of the first candle. Again, the market broke down, clearly signifying that the market is bearish. But but what actually market did was it couldn't take this low, and another bullish engulfing candle pattern formed over here. And this bullish engulfing candle over here was respecting the 50 over here. Clearly, you can see rejection of price and further movement. You can see trendline liquidity over here. And if you try to plot the anchor VWAP level over here, you can see that this bullish candle broke this VWAP, the days VWAP, the 21 moving average, as well as the 9 moving average towards the upside. And if you try to plot the FIB 50 level, even it formed chalk over here, breaking this structure. You can see clearly that the price might have taken support at the FIB 50 level. And you can see at FIB 50 level, this doji had formed over here. This FIB 50 with formation of doji, and after this engulfing candle also you could have taken long position, expecting the market to reach at least the 100% level. You can see clearly the 100% or the 200 moving average level, guys. You can see clearly the 100% level has been reached. So there were multiple entries for your size, guys. After this bullish candle, when price forming this support, you could have taken, keeping your stop loss just below this candle and targeting upwards, or after this bullish momentum where the price retraced back. But when you look at the price retracement, whether this 350 is gonna be respected or what, is when you analyze that. You can see clearly even here there is a break of structure, so you can mark this as an order block as well. You can see here that it broke structure towards the upside, and this is another break of structure and the large down move which caused the up move. You can mark this to be as another order block as well. You can see clearly you could have placed your stop loss just below this pip. uh, just below this pip, and you could have targeted the 100% move. You could have targeted the 100% move. Mm. You could have targeted the 100% move here or the 200 moving average, or you could have targeted this high as well, this liquidity also. This is one setup, guys, but how an 50 level is going to be respected or what? How can we tell it clearly is that when the price reaches the particular zone where there is demand, right? There is always a formation of when the price retraced, came to this zone. Before it reaches this zone, guys, this 50 level, you can see pullback and sudden impulsive move, and the price didn't actually touch here. Again, there was rejection of price. Again, the price touched over here, formed a doji candle. Again, the price retraced upwards. Only when you see this kind of pattern, when the price reaches your particular zone, only then those order blocks will be respected. So even if this zone is there, you can see clearly after this retracement, price clearly broke the structure without any retracement towards the upside, clearly signifying that the market is bearish over here. And here you can see after the last sell-off candle, after this consolidation over here, there might be a lot of buyers enter the market seeing this bullish candle. Even I thought that the market would further continue towards the upside, seeing this 200 moving break of structure towards the upside. But what happened is that the following candle formed a bearish reversal candle and an engulfing pattern as well, clearly signifying that the market is bearish. One confluence is that 200 moving average, that the market couldn't close the 200 moving average, and another confluence is this engulfing pattern, and the another confluence is the last sell-off candle, this bullish candle before this down move, because a lot of buyers might have entered this market after seeing this consolidation. This is another manipulation where you could have easily entered the trade here, expecting the market keeping your stop loss just above that pip and targeting this low or this low, or you could have targeted the double of this retracement as well. As um, you can see this upward movement. This is upward movement, and if you target the double, you can see clearly. You can see the price came all the way here. If you try to plot another, you could have just tried your stop loss as well. Here, there is no much confluence of where exactly the market would have traded. But if you try to plot the fib extension levels, keeping the common point between here, and here, you can see clearly the market took support from 1.68 level. This is one. Here is the common point. I think there was because of this aggressive selling, there was further selling, but buyers entered the market here. You can see clear trendline liquidity over here, expecting the market to break further downwards. But what you can see clearly here is that if you try to plot the anchor VWAP level over here, you can see price taking support over here, and price broke this upward candle, clearly forming chalk. And if you try to plot another fib level over here, the you can see clearly the price taking support at this zone, clearly signifying that the market is bullish. And based on risk to reward ratio, and you can see another confluence is that when the price reached this zone, right? This is the 50 level, the anchor VWAC support level. Before price actually reach this zone, you can see sell off, further retracement, sell, retracement, and sell off. And after this bearish candle, there was no further selling, and it led to further buying after the price reached this zone. You can see clearly here on the chart pattern. And if you try to plot the fib retracement level, keeping the common point between this, the common point between this, and the common point between this, you can see clearly that the price went all the way to 1.68 level. This is one confluence where you could have traded or you could have exited your position at 100% level. This support rejection from 100 moving average, price retraced back, took again support from the anchor VWAP level and the fib level, and the price rallied upwards, reached the 100% level, or you could have targeted this swing structure, or you could have look at this fair value gap over here, this fair value gap. So you can see there was another fair value gap over here, and the order block as well. You can see this above this is 1 minute order block as well. This is 1 minute order block, which clearly broke this low, forming a chalk. Uh, you could have targeted all the way to this level, the 100 as well as the 1.681 level, keeping your stop loss just below this. Uh, Keeping the stop loss just below this pip and targeting this high or this high. This is one good such trade where you could have taken. After the price reached the 1 minute order block, you can see further rejection of price, clearly signifying that the market is bearish. But again, price took support from this 200 moving average and rallied upwards. Again, it took support from here. You can see clear price rejection from here. This blue color line is the 200 moving average. Again, it took support and rallied upwards, but it couldn't cross the fib of the first candle, and you see clearly it broke structure towards the downside, clearly signifying that the market is bearish over here. This is the break of structure towards the downside, and you can mark the last up candle before the down move. But what happened is that you can see after this bearish continuation of pattern, you can consider this to be an order block as well. But what happened is that uh, this structure which broke structure to this supply which broke structure towards the downside, you can see the last up move candle. Uh, if you try to plot the fib levels from here to this level, you can see clearly that this swing structure, the price couldn't cross this 200 moving average over here. This is the fib 50. You can see clearly that the price facing rejection from this fib 50 as well as the 200 moving average, and the clearly broke structure towards the downside, this impulsive momentum. And you can see this retracement, guys. This is a very good retracement, expecting the market to further move towards the downside. But what happened actually is that you can see another consolidation over here. You can see the last down move before the up move, where the price took support and was trying to head higher. And I booked a loss of around 2000, guys, because I took actually a short position, keeping my stop loss just above this pip and targeting even this low and targeting this low as well. This is what my trade was. But what happened actually is that after this trendline liquidity, the market, what I expected is to go further downwards, the complete bearishness. But what happened is that as I took after this rejection from this 9 moving average, you can see clearly the price rejecting from the 9 hour moving average and trying to head lower. This is where I took my position, keeping my stop loss just above this level or this level. But what happened is that you can see multiple supports over here, and you can see the three M structure, like this kind of pattern. Uh, that's market taking support here and trying to go again here and trying to support and trying to head. This is a mountain reversal of the mountain top. This is a clear sign of bullishness, guys. You can see that the market, there are high chances that the market will cross this level and try to head higher. This is a clear support. But for me, what I thought that after this trendline liquidity, the market would continue further selling. But what happened actually is that the market continued to rally upwards. And you can see here at this consolidation after this upward momentum, the market tried to form a trend line kind of liquidity, and you can see multiple rejection of price from this moving average, this VWAP, this VWAP, and this VWAP levels. You can see multiple VWAP levels, price getting rejected. And if you try to draw the fib extension levels from here, you can see clearly that the common point between this, the common point between this, and the common point between this, you can see the market rallied all the way to the 100% level. And you could have entered this long position. When I took the stop loss here, I just exited my position. But what I could have done is that after seeing this downward momentum, keeping my stop loss just below this pip, or after this rejection of price, keeping it just below here and targeting the 100% level. This is one another good setup where you could have taken your trade. But here, your stop loss might have been hit. The stop loss has been hit. So this is one loss booking trade where you could, there's high chance, there's chances that you could have traded over here. And here you can see clearly that the price couldn't cross the fib of the first candle. And after this bullish momentum, the price faced rejection over here and further continued downwards. And this is quite unexpected because it's after 1 o'clock, 3 o'clock. So it's better not to trade at that time. And these are good setups, guys, where you could have taken your positions. And let's look at the premium charts over here at around 1016. At 1016, you can see clearly in Nifty there is this consolidation and the price taking support from 550. And here in put premium, in the call premium charts, you can see clear trendline liquidity. Oh, at around this liquidity over here and this bullishness when this momentum has been taken place, the price taking support from this VWAP level and trying to head higher. You can see clearly after this bullish engulfing candle, you could have taken long position targeting this support. It's around like 30 points of profit. You could have just traded over here, targeting multi. When this rejection from this 200 moving average, you could see you could have exited your position as well. This is one good setup where you could have taken your long position. And another good setup is that after this engulfing pattern, it's around 1033. At around 1033 at the put premium, you can see clearly that the price took support from here and this broke down structure towards the downside. But here you can see clearly that pivot levels. This R1 level, this is the pivot level, and this is the S1 level. When the market gaps up, as I've told you in previous videos, or the market is bullish, when it retraces, there are high chances that the market would take support from the R1 level or as the 200 moving average. So you can see clearly that the market even tried to cross this 200 moving average, clearly signifying that the market is bearish. But what happened is that this R1 level as well as this 200 moving average here formed some kind of support, and you can see at 1033 this bearish break of this candle towards the downside, resulting in this bullishness. And you could have just taken a long position here, keeping your stop loss just below this 200 moving average line and target this high or any of this sort. You could have clearly doubled your premium, guys, if you have taken this short position just by trialing your stop losses. This is one good setup, guys, where you could have taken long position over here. And one more is at call side, it's at around 1149. And looking at premium charts at 1149, you can see here in 1149, you can see the market clearly was heading down. At 1149, you can see clearly this bullishness and the retracement towards this candle. You can see this hesitation of market after this downward selling. There are high chances the market would further continue selling, guys. But what happened here is that the market rallied upwards. So whenever you see that there is like after facing 200 moving average resistance, there is rapid selling and hesitation of market trying to move. There are high chances that the market might face resistance over this VWAP level or the 200 moving average or the fib levels or the common order block levels, and the price will rapidly sell off from here. The high chances that the market, you